What's happening, everybody? Appreciate you tuning back into another video. Hope you're enjoying your weekend. This video is going to be really exciting. I'm really excited to share some of the settings that I have, and we're going to go over kind of how to develop the appsettings.json folder from scratch in this video. We're going to be talking about kind of some new innovative ideas that the creator of PTFeeder released a couple weeks ago. Based on, now we can create our own triggers within PTFeeder, and I'm really excited about that. So we'll go over that in the pair grouping section. And I kind of reformatted all of my settings. So I'm going to go over that as we walk through how to set up this app settings JSON folder. So basically what PTFeeder is, for anybody who is not aware, PTFeeder basically overwrites all of your information in Profit Trailer based on certain market conditions. It's pretty simple the way PTFeeder does it. There's certain naming conventions that it uses, but these are the three Profit Trailer folders that PTFeeder needs to overwrite. This is all of your information that you put into Profit Trailer to get Profit Trailer up and running, right? This should look familiar, these pairs, indicators, and DCA.properties files. We're not going to get into these too specifically, but basically what PTFeeder does is it goes over the market conditions. It queries the exchanges for all of the necessary information on each individual coin. You can create market conditions and coin specific conditions on how you want Profit Trailer to buy or sell these coins. It has custom calculations for each individual coin for trailing profits and trailing buys, which is a really powerful tool in my opinion. And so, yeah, basically if you're completely new to PTFeeder or you don't have it yet, I think it's a super powerful tool. If you're not using PTFeeder with Profit Trailer, you're really leaving a lot of, not even just money on the table, but you're kind of putting yourself at risk because Profit Trailer doesn't have all of these specific overrides and offsets that you can use with PTFeeder. So if you haven't gotten PTFeeder, you can go to their website, or you can use the links in my description. That helps the channel out if you do want to purchase it. They're in the description. So basically the way PTFeeder works is there's a bunch of different sections. You can see section PTFeeder, section common, section defaults, groupings, market conditions, and pair groupings. So pretty simple. PTFeeder, this section up top here of your appsettings.json folder, is all basically just PTFeeder specific. Okay, this is just telling PTFeeder how you want it to calculate certain things. So top currencies to check, I have set to 30 minutes to measure a trend, minutes for longer term trend. These are in minutes. So, just very basic. Common section. This is where it gets a little more interesting, and this is where I want to kind of give a couple explanations about naming conventions. So PTFeeder overwrites your DCA folders in Profit Trailer, your indicators folder in Profit Trailer, and your pairs folder in Profit Trailer. The way it does that is if you don't have a prefix on one of your commands in your app settings folder, all of those commands will get overwritten into your pairs property. As you can see here, we have DCA. Now, your DCA, if it has a DCA prefix, guess where it's going to go? It's going to overwrite in your DCA properties. So the way that this works, and same with indicators, indicators will get overwritten into your indicators property. So a good example would be, look at this. This is indicators in your PTFeeder appsettings.json folder. This is the command that translates over into PT's indicators properties right here. And as you can see, it's exactly the same. It just has different notation. And the reason for that is they're different programs. PTFeeder will take this command and overwrite it and translate it into this command in Profit Trailer. So it's constantly overwriting these folders every 3 to 5 minutes based on market conditions. So it's very simple. If you look at that, this is the same as this. Okay, and it does that for every folder. Very simple. These are all your indicators, the same way you would set them up in Profit Trailer. Same thing goes for DCA, and then you have your defaults. And this is kind of, we'll just kind of get in here. We'll go to the defaults. All properties in this section get translated to PT properties based on the PTFeeder naming convention, with default at the beginning, and also have pair specific overrides. To see all the properties possible, familiarize yourself with the Profit Trailer wiki. Pretty simple, self-explanatory. This is your buy strategies. These are all your default stuff. If you haven't used PTFeeder, basically your defaults are going to be used by default. Down below, we're going to have different sections, market conditions section. You're going to have your groupings, your pair groupings, and you get to override or offset your default settings. So based on certain market conditions. So basically, this is all of my default information, my sell strategies, my DCA strategies, my buying strategies, et cetera, max profits, min buy volume, all of this stuff. This is where it gets really, really interesting, is the market conditions grouping. So I changed my market condition grouping dramatically, and I'll explain in a second. So there are 3 market conditions that I'm using. I'm using the bear folder, I'm using the boring folder, and I'm using the bull folder. Basically, this is, you have different folders that you can create a name for. I could name this whatever I want. I can name this Crypto Boss Bear. I can name it whatever I want. And the next line is your trigger. What is going to put your bot into this folder? That is what this trigger does, this max top coin average change. There are multiple triggers that you can use in the market conditions section. So there's the top coin average change, there's the minimum base coin price change, there's the maximum base coin price change, there's the included coin VWAP price change, et cetera, et cetera. So these are the different triggers that you can use for the market conditions grouping. Now remember, they're treated as an OR statement. So if any of these triggers, if you use multiple triggers here, I could use this minimum base coin change here. And obviously this is not the correct format, but I could put this in. If it was in the correct format, I could use multiple of these. And if one of them is true, you get put into your bear folder. Just keep that in mind. That's very important. But basically what this trigger is, max top coin average change. So this is saying that if the maximum change of the top coins from your configured exchange is less than this maximum of negative 2.5 in my case, then we are in this market condition and we will use the below offsets or overrides. And so as you can see here, if the top 30 coins in my exchange, as we put right here, top currencies to check, is 30. If that is true, if those top 30 currencies, their average change over the last, 60 minutes, I believe, is less than 2.5%, then all of this will get enacted, right? All of this will be my override. All of these will get overridden. My max trading pairs, this is what I've been changing in this section. I changed everything to start looking at more non-coin specific information to be overridden here. And I'm going to overwrite, buying strategies on a coin specific level down below in my coin specific overrides. So I'll explain that in a second. But basically in a bearish market, I want to have less trading pairs. I don't want to have the opportunity to get into deep bags. So I'm going to lower my trading pairs from 10 to 8. So my default is at 10, which is somewhere up in here. Max trading pairs should be up in the comments. So I have 10. That's going to be the default that it uses if I didn't use this. But now if I'm in a bear market, it's going to use 8. Same with min buy volume. I want to be able to buy more liquid coins in a market condition that is bearish. I don't want to get stuck in those illiquid, not moving coins, right? So that's why I have this being overridden. I also want to have a different, different DCA strategy in a bearish condition. And so I'm overriding some of my DCA information here to make it both a little bit more difficult and just have different DCA enabled strategies, right? I'm going to start at -3 instead of -2. I have my max buy times at 3. My triggering is a little bit different. It's just a little more negative for a bearish market. Now going into the boring, I have no overrides. I have no offsets. So what it's going to do is it's going to use my default information. All of this stuff in the common and in the default section will be used for a boring market. Pretty simple, self-explanatory. For bull, it's a little bit different. I'm still using the max top coin average change. If you're using Bitcoin, you can also use the minimum or the maximum base coin change, which is saying if you're going to use the minimum, that's saying that that if the minimum change of your base coin against USDT is more than this minimum of 2%, then we are in this market condition. I tend to use the maximum base coin price change for these folders. This is saying that if the maximum change of your base coin, example Ethereum or Bitcoin, is against USDT is less than this maximum of 2%, then we are in this market condition. I like to use that one in the bear folder. So what I tend to do is have, obviously this is terrible font, but you'll get the idea. Oh, and I'm in all caps, but this is awkward. But so anyway, you get the idea. But what I would tend to do here is like -2. So that is what this is saying is if, and this is in all caps, it should not be in all caps. You can read the wiki. It says right here, this is the example. But basically, this is saying if Bitcoin has fallen by -2% over the minutes to measure trend, then what you need to do is put me in this bear folder, because if Bitcoin drops fast in value, then, you know, we have a problem. You know, a lot of times you're going to end up in a lot of bags. When Bitcoin drops, everything else drops. You know, it just depends. You can use min or max. It just depends on how you want to set that up. So keep that in mind. But remember, these are or statements. So if either of these is true, you're going to end up in the bear folder. So if this one's false, but this one is true, you're still in the bear folder. So just keep that in mind. That is a lot of times why a lot of people end up being stuck in the boring or being stuck in the bear folder for a long time, is they don't realize that they have too many triggers and they're always in a bear condition because of the way they set up their triggers. So keep that in mind. The next one is bull. I'm offsetting my max trading pairs and my min buy volume, just because when we're in a bullish market, it's okay if I have more trading pairs because we're in a bullish market. I want to try and take advantage of all of the price action increases. Same with the coins. I'm okay trading a more illiquid coin in a bullish market because hopefully, you know, it's rising too, kind of being propped up by the wave of the bull market. So this is where it gets really, really interesting to me, is the coin groupings. And we're going to go here, the pair individual, pair specific groupings. This is where I'm doing a lot of the dirty work that we used to kind of do in the market conditions, but I think it's much more valuable to do on a coin specific basis. And how I'm doing that is like so. Basically, each of the following sections are optional. You don't need any of these. If you don't want them, you can just delete them and that's fine. But basically, you just need to keep the JSON format, make sure it's correct. And then other than that, there's many different groupings that you can use. So I'm using new coin grouping for my first one. And basically what this is saying, if the coin has been listed on the exchange within the last 5 days, sell only mode is enabled. And keep in mind that this is a coin specific sell only mode. This is not going to put your bot into an overall sell only mode. It's only going to tell your bot to sell this specific coin that was just listed on the exchange. This is why this is so powerful, and you'll kind of get an idea of why it's powerful as we get into the more detailed stuff. So with that said, we're going to go into the price trend change grouping here. This is really powerful. This max price trend change percentage or trend percentage change is our trigger. Now, what this does is if the price change for a specific coin is less than this maximum over the period defined in the corresponding minutes to measure trend, which in my settings is set to 60, then the offsets defined will apply. So basically, if a coin, say I'm using Bitcoin as my base currency and I'm buying Cardano or ADA. If ADA goes -4% over the past 1 hour, then I don't want to purchase it. I want to let this coin kind of sink down lower. I want to try and time the bottom, but I want to make it more difficult to buy this coin because it's clearly in a free fall if it's dropping 4% in an hour. So don't make it easier, make it harder to buy. And that's what I'm doing with these offsets here. Okay, so now we're going to get into the real bread and butter of this video. This is where it gets really interesting. This is where I had my conversation with Metadone, the creator of PTFeeder, and he was kind of explaining to me how we can create our own buying triggers, and that is something super powerful. I'm really excited about this, and I'll explain why when I go into TradingView. So basically, we're going to use this average candle size grouping next. And let me find this thing. Where is it? Should be right here. Okay. So average candle size. The average candle size is the addition of the upside and the downside volatility over a period defined in the corresponding minutes to measure trend. If it is less than 0.1%, then the offsets apply. And so this is really important to understand. So the triggering system for the average candle size grouping right now is max percentage size of price. So this is great. And you can go into TradingView here. And this is the TradingView script that a guy named Squiggles made for PTFeeder. And anybody can go and use this thing. But basically, long story short, this blue graph in the background is the histogram. This is the average candle size grouping. In order to get this to display, you'll go to inputs, and I think default is set to volatility difference. Just switch it to average candle size, and you'll see this displayed. So basically here, we're using the max percentage size of price as our triggering system. Now, previously, the max percentage size of price, excuse me, it's a tongue twister, it's a maximum. So anything below this line, which I have set to 0.3 in my settings, anything below this line is going to be the trigger for this situation, for this grouping. And all of the overrides will ensue if it's below 0.3. And so as you can see here, right in this section here, it's below 0.3, and I can zoom in. So right in here is below 0.3. And basically what the average candle size grouping function is doing in very, very layman's terms is it's just calculating the size of the candles, and it's charting it on a graph. So if the candle sizes are really, really small, as you can see here, then this graph falls. And this is what we're seeing here. So below 0.3, you're seeing really, really small volatility in the market. And so that is about the time frame. So right here to right here is where our average candle size grouping is below 0.3. And as you can see, we had some really, really low volatility in the markets comparatively to these giant candles that we saw over here. And obviously, with these giant candles, you see a giant increase in the average candle size grouping, right? So very simple. And the way I want to use this is if it's below 0.3, then I want to offset my buying strategies to buy more. And the reason is because I'm using EMA gain, right? So if the negative, if it's a very small candle size, then it's going to be difficult to get in and out of trades. So if it goes below 0.3, then the candle sizes are probably pretty small, and you're probably never going to catch a buy on this individual coin. Now, when the candle sizes are really small, you tend to see a breakout in one direction or another. Now, what we saw here was a small little breakout above 0.3 in the charts, and that was about a 1.6% gain in about 2 hours, which is fine. But then you also saw a massive decrease in price action as well. But so basically my strategy here for my overrides when it's below 0.3 is to override my buy strategies so it's easier to get in and out of trades. So what I could do is I could, like I made a note here, I could adjust my selling strategies to make it easier to get out of a sale. So I could adjust my sell strategies for a lower profit. So that way, if it does break in the wrong direction, then hopefully you have gotten out of this coin before it breaks down. Basically, you could set your profit, your sell, your gain value to maybe 0.3% instead of 1%. And then you could probably get out of a trade before this volume or this price action decreases dramatically, and then this average candle size increases dramatically. So this is the part that's really cool, is we created our own condition. So like I said, in the past, we were only able to use max percentage size of price, which is anything below 0.3. now we're able, by using this math here, we're able to use a min percentage size of price at 0.3. And you can change this to whatever you want. You could change this to 0.4 or 0.2, whatever. And basically I'm going to use 0.3 again. And what this min is allowing us to do is anything above this line is now going to use these overrides. And this is really cool to me because what I can do is this sort of completes these candling or these triggers, all of these grouping, these pair groupings, these new calculations that we're able to do, and I'm doing it in the downside volatility grouping as well. It really gives us the opportunity to fully maximize these groupings. So basically what I'm doing here is when the candle sizes increase dramatically above 0.3%, as you can see most of the time from about here to all the way over here, we had candle sizes larger than 0.3%. What this is going to do in my strategy is I'm going to make it more difficult to buy a coin when it is above 0.3. And my thought on this is because I'm using EMA gain, I want it to be harder to purchase a coin when it's above 0.3, because if the average candle size grouping, this graph increases 2 times. It increases when there's negative price action, large negative price action, and also large positive price action. So either direction, this chart is increasing. So that makes it kind of a difficult indicator to fully understand. But when you're using EMA gain, you're basically looking to buy below the lowest of the 2 EMA lines. And so that basically we're looking at buying on a downtrend. And so if the price action increases dramatically with this average candle size, then I'm okay. I'm still using the EMA gain. I'm probably not going to catch a buy anyway. So if I'm using, but if the price action decreases dramatically, then I'm probably going to get stuck in a really big bag. And so I want to make it more difficult to buy when this average candle size is extremely large. So, and then I can also adjust, as I put here in this note, I can adjust my sell strategies to sell at a higher profit, because if the average candle size is increasing dramatically, then you're probably able to catch a better sell. So that's a really cool thing. It kind of completes these average candle size groupings for me. I'm really excited to start testing these. I'm also using the downside volatility grouping the same sort of way. So I'm using, let's go back into here and just briefly touch on the downside volatility. The downside volatility is measured as the average change as a percentage between the open and the low of the 5-minute candles over a period defined in the corresponding minutes to measure trend. So my minutes to measure trend is 60 minutes. So it's going to take 5-minute candles in a 60-minute time frame and measure the average change as a percentage between the open and the low. It's pretty simple. I mean, basically it's the same idea here. This red line on my screen is the downside volatility indicator. And so before, as I said before, we were only able to use the max change from open, which is anything below, in my case is 0.2. Anything below, let me get rid of this green line so that way we can see this a little better. Anything below 0.2 is where our offsets or overrides would apply. Now that's great, but what happens when the downside volatility is super high? You don't want to set this too high because then it overrides all the time pretty much. So having this new math in our equations is really, really powerful, because now we can use both up and down. We can use, we get the full range and full power of this new setting. So basically, let me just briefly touch on what I mean. So 0.2, anytime the price action is, or the downside volatility is below this 0.2 line, which would be right here, then I'm going to make it easier to purchase a coin, because what this is telling me, when the downside volatility is extremely low, and there's a couple ways you can look at this. All right. So keep this in mind. There's 2 ways you can play this. when it's below, when the downside volatility is super low, that means that, you know, there's probably a chance for an increase in negative price action. That's one way of looking at it. I'm just kind of backtesting and looking at my chart, and I'm looking at the price action associated with everything. And this is the way I have it set up now. So if you have any comments or you want to comment on this strategy and maybe how you're using it, leave a comment in the leave a comment below, and I'll get back to you, and maybe we can maybe I'll change my philosophy on this. But if the downside volatility is below say 0.2 right here, this line, then that means that there is less like there's more chance that there will be a downside volatility increase in the near future. You know, this means that it's pretty even. It's obviously sitting pretty horizontal here, and basically I'm gonna be downgrading my A buy value and my B buy value. So that way it's a little easier to get into a trade when it's beneath 0.2. And then with this min change from open, I'm actually going to be increasing my min change from open is 0.275, and I'm going to be increasing my A buy strategy and my buy value, because when the downside volatility increases up here, that means that there's more downside volatility, which means that there's more red candles than there are green candles. And in that case, I want to make it harder to buy. And so when it's low, like up here, say when it's below 0.2, then I want it to buy easier, because that means that it's pretty even. You know, the red candles and the green candles are pretty even. And as you can see, that was the case in here all the way from here to here. And then we did get a price decrease pretty significantly, and that popped us up above 0.2. So if that makes sense, I hope that makes sense. But if it's below 0.2, I want to make it easier to buy, because the downside volatility seems to be pretty low, and you can hope for, you know, maybe a price increase. Now, there's another way you can look at that, like I said, is maybe you're expecting, since the volatility is so low, that there's probably going to be a spike in downside volatility, and that would mean that the price action would decrease. There's two ways to look at it. Let me know your thoughts in the comments below. I hope that made sense. But these new strategies with this mathematics that we're able to do with PTFeeder is a game changer. I'm now able to use 0.275, which would be somewhere in this range. Anything above 0.275, it's going to be more difficult for me to buy a coin, for me to buy that specific coin, because what it's telling me is this is the downside volatility. When the downside volatility is very significant, that means that we're having a lot of red candles. So I want to make it more difficult to buy in that situation when there's a lot of red in the markets. So just remember, these are coin specific. It's not like a blanket setting. This is going to go in. PTFeeder is going to do these calculations for every single coin that you're able to trade. So that is super, super powerful. I hope that made sense. You know, there's a lot to go over. There's a lot to cover. So if I missed something or I misspoke on something, leave it in the comments. Let me know. If you liked the video, please do me a favor and leave a thumbs up, and even a comment really helps out. I'm really trying to grow this channel. Subscribe if you enjoy the content. And last bit of shilling is join the Discord group, because we talk about this kind of stuff all the time. We have a great group of people in there. We have some really great moderators who are helping out with PTFeeder questions. Even we're just doing, you know, trading view questions on all the altcoins and everything. So I really appreciate all you guys out there, and I will catch you in the next video. All the links to purchase this stuff are in the description. That also helps the channel out a lot. So I really appreciate it. Take it easy, fellas.